Hi, my name's Andrew Masters and I'm an analyst at FIBO Group, and in this video we'll talk about the rules of transaction and opening notion of leverage. We talked about the fact that we can incur costs and about their amount, but you did not understand at the time how to calculate and how to control them. Let's go back to that moment when we decided to buy. Our price was at a level of 146.10. We decided to put the stop loss or protective order 100 points below the price in the direction opposite to the intended direction. In money terms, those 100 points make $10 of our anticipated losses. The price really dropped, but it began to move up without affecting our protective order and then dropped once more. At that moment we had losses, but there were still points in the reserve for our protective order. I hope you understand that the market does not move linearly and the market price has a zigzag path. Now you're in the black, and in an hour you're in the red, so it's very important to have iron self-control and strictly adhere to the mapped out strategy. If I were afraid and closed the position, we would incur losses and we would earn those 150 points we have already discussed earlier. But you should not maintain the position for too long and increase your losses, hoping that the pair will turn around and go in the direction you want. Emotions management is covered by the psychology section, which we will discuss a little bit later. Now let's return to our schedule. And as we can see that after a zigzag motion, our prediction was justified and the asset went in the right direction. We considered how much we would earn and what costs we would incur if we traded on our own funds. But there's an accepted tool that's called leverage in the Forex market, where the debt funds are allocated by the broker for trading. It can be different, 1 to 4, 1 to 100, and this should be stated in the contract with a broker. What does 1 to 100 leverage mean? It means that the broker allocates the funds for you that are 100 times higher than yours, and you can open a transaction that is 100 times higher. Let's study the leverage trading by using our transaction as an example. Take, for example, 1 to 10 leverage. The situation is the same. We have 3 types of deposits: $1,000, $5,000, $10,000. With $1,000 deposit and 1 to 10 leverage, we would earn $1,350, which is 10 times more than if I were trading without the leverage. With $5,000 deposit, our income would make $6,750. With $10,000 deposit, our income would be increased to $13,500. When we were trading without leverage, our profit made 13.5%. And now when leverage is 1 to 10, it increased 10 times, up to 135%. However, we should remember that there are 2 sides of the same coin. If the profit increases, the costs will increase proportionally. When the deposit is $1,000, the cost will make $100. And if the deposit is $5,000, the cost will make $500. If the deposit is $10,000, our costs will increase to $1,000. In the next video, you'll learn about trading session, spread, and other terms important for the trader.